thought I saw Jan's. Yeah, he's here.
Hi.
Hi, Jan. How are you? We couldn't start the show without you, of course.
Hi,
So
Jan.
welcome.
Hi.
Well, Jeff, what do you think?
Yeah, I think we should kick it off now. We're only waiting for a few more people, but Kay can join us a bit later, but I think we should make a start. Jan's is here and we should be ready to go.
Okay. Well, I'd like to welcome all the participants to our May 17th CAG meeting as a follow-on to our discussions that we had in March. Welcome to all the CAG representatives and official observers. We'll be brief with introductions since it's really sort of a tag on to the earlier meeting, but specifically wanted to recognize Dr. Stavros Stamadakis, our IESBA chair, and Carolyn Lee, the deputy chair of the board. Also from the PIOB, Shigeo Kashiwagi is with us. And we do have a new CAG representative. I'm not sure. Oh, yes, she has logged in. Jasmine Gamboa, who is replacing Laura Schiffman as the new representative from the FEI International. Also on our call today is Juan Carlos Serrano from the World Bank, who is representing them in the place of Zarmara Morel, who is unable to attend today. So with that very brief introduction, and then also, of course, the IESBA staff staff members that are with us. We are going to begin. We have two important sessions today. One on tax planning, the other one on engagement team and group audits. The first session is going to be covered by Jens Pohl, who is a board member and also the task planning task force chair. And with that, I'll go ahead and turn it over to you, Jens.
Thank you, Galen. Good to see you here. Good morning, good evening, good afternoon. Last time I had the opportunity to present to you, to this group, was a quite hybrid meeting, partly in New York on I think it was the 10th of March, and partly virtually. And just at this day, I think in US, officially the pandemic was announced. So more than 1 year later, I'm now coming to an update to your group, and I'm very privileged and happy to give you this update. But I'm starting with this remembrance to the 10th of March, because you could say why we weren't quicker. I think the main reason why we are there where we are today is that our outreach activities since then were in the first month quite restricted, because many of our stakeholders were very much involved in ad hoc issues. So that is one reason for being a little bit later than originally planned. The other one was that we at board level had emphasized the importance of the NAS and fees project in the second half of the last year. And as you all know, we have finalized these projects. So now we can look with more energy now to the tax planning and related services project. But I want also to highlight at this stage that in the NAS project, we have included one topic, so to say, on a fast lane, which is R604.4 for all audit clients, which is a prohibition of marketing tax planning arrangements with the intent of tax avoidance. In a nutshell, That's the wording, and I think that is a very important part of tax planning and related services, but limited to the role of the auditor in this context. As you know, this project is from scoping far more elaborated. We are looking at all accountants and not specifically to the auditor. So accountants in business and accountants in public practice. Next slide, please. I just want to highlight a little bit the objectives of this initiative. We want to understand the practice, the environment, the regulatory environment, and other developments in corporate and individual tax planning. You know, the discussions on several scandals, Paradise Paper, Panama Paper, LuxLeaks, Luanda Leak, and others. We want to identify and analyze the ethical implications of those developments and determine whether we should enhance the code or do any further actions. And our plan is to have a report and recommendations to the IESBA board. And as I will show you the timeline later, but in September, we want to present our preliminary report, and in December, the final report. Just as a footnote, in the meantime, you probably all have seen this publication by OECD on tax planning, or I wouldn't say tax planning, it's the OECD Professional Enabler Report. And I will come to this later. I think it's a very important report which shows where our work is here. It is not the illegal work or the non-compliance part of enabling legal tax arrangements, but we are here discussing the gray zone where we are in the legally, I would say, acceptable environment, but still in an environment where the accountant has to know that he is in dangerous environment. I will come to this differentiation later. Next slide, please. What is the purpose of this today's sessions? I want to inform you about the outreach activities in the last 12 to 13 months. I would like to give you some new aspects we are discussing. I would like to show you our current thinking on certain items, on tax planning definitions, on transparency and accountability, and also matters for future considerations. Next slide, please. The key information gathering activities in the last year started with the desk research involving published articles and journals, webcasts, webinars, and other materials of professional organizations, and for sure publications by OECD, UN, and European Commission and others. We had most of them virtually exchanges with different institutions, and as Annex 1 you will find our map with all the organizations we had contact in the last month from November to up to date, and you will see that we have a huge amount of different stakeholders we reach out. In-person meeting we had in February of the last year with OECD, with Accountants Europe, members of Parliament, and UK professional bodies, and the global tax leaders of the big 4 firms, GPPC firms. And we had also individual conversations face-to-face or virtually with representatives of the firms. Next slide, please. The key emerging themes which I want to highlight out of the last CAG meeting and the discussion we had are that there is no one set of ethical principles applicable to PAs across jurisdictions. So tax planning impacts ethical behaviors across all the fundamental principles. We saw that the concepts of fairness and transparency are expected and they are necessary elements. And the increased focus on ESG, so environmental, social, and corporate governance reporting is highlighted. And we had also discussed, for example, GRI, this framework where there is a specific standard on tax policies and taxation. Another very important point is that the criticality of professional development in assisting the PA exercise professional judgment. And there is another discussion we had also on board level with the technology group, task force and working group on the complexity risk. Complexity means here in the context of tax planning that we have different multi-faceted disciplines of tax planning, and it's quite challenging for the professional accountant, especially if we have a cross-border situation, to understand all the details and the environment of different jurisdictional taxation legislation. So we are in close contact with our colleagues from the technology work stream to think about whether this threat or this aspect of complexity, not only for tax issues, but also for technology, digitalization, and other blockchain developments, whether this complexity risk should have some reflection in the code. Next slide, please. I now want to show to you a little bit or give you a flavor where our discussions on described terms is developing. So first of all, there is no clear line between tax planning and aggressive tax planning. And we learned that in some jurisdictions, the notion of aggressive tax planning is seen differently than in other jurisdictions. In some jurisdictions, to have an aggressive tax lawyer is not seen as unethical or as bad. In other jurisdictions, the notion of aggressive planning is seen as unacceptable. So by that, we have also seen that some jurisdictions may use several approaches to encourage tax compliance and to discourage unacceptable tax planning practices. So that is our problem as a global, on global level, to find an overall and overarching definition. Tax regulations are dealing with unacceptable tax planning practices, for example, by general anti-avoidance rules in some jurisdictions and targeted disclosure rules or mandatory anti-avoidance disclosure rules in other jurisdictions. So we have seen that depending on the legal system and the cultural background, many legislators have done different approaches. And we have seen another notion, which is acceptable or unacceptable tax planning. Next slide, please. We think that is our preliminary view on that, that it is difficult to adequately define aggressive tax planning on a global scale. Tax planning is defined as a defined term in most jurisdictions, but there is a lack of authoritative literature and other publications that clearly define aggressive tax planning. And we would like to explore the merit of a principle-based framework to guide the professional accountants. And that's why we would like to have some indicators or factors which would show the professional accountant where a certain tax structure may be seen as acceptable or unacceptable. We know that it is problematic to come from one difficult to define term to another term, but having heard to many of the stakeholders, we think that this notion of acceptable or unacceptable tax planning behavior could be something we should focus on more than just to look at aggressive or unaggressive tax planning. I would like to pause here and give time for views or reactions to our preliminary thinking.
So with that, thank you, Jens. And with that, while we're waiting for hands to pop up, let me just share a couple thoughts that I had as you're speaking, Jens. Last week in the NSS meeting, one of the comments that were made is, will we have the same issue defining acceptable versus aggressive as we had discussed previously. So I'm sure you're going to want to weigh in on that. I'm as I'm listening and reading these materials again, I'm also thinking, well, why is all the emphasis on planning? What about compliance and the public interest? It seemed to be fine at the end of the day is probably more on compliance than planning, although the two are interrelated. Planning gets into the accounting that goes on with entities as they're preparing their financial statements, and later on the compliance when they file the tax returns and pay the tax. But I think there's a lot of emphasis on planning here, and I'm sure that the task force has talked about the compliance aspect of it. And finally, just to make it clear in my mind, Jens, this isn't just directed at auditors, is it? This is also directed at professionals, accountants in business, the CFOs and controllers and so forth that are preparing and thinking about what the taxation is to the entity is going to be at some point down the line. And to me, that's almost more critical than the auditors are going to be facing what those people came up at the end of the day with in terms of how the entity is treating their taxation. I don't see any hands at the moment, but Jeff, do we have?
We do have a raised hand just now. Dawn?
Okay, Don, if you would weigh in, please. Don?
Yes, yeah, thank you. And thanks very much for your presentation, Jens. This is a really challenging topic, I'm sure. My concern about defining the aggressive tax planning is that if you have a definition that defines what it is, it maybe provides a space or room for accountants to then say, okay, well, here's this box within which it is aggressive tax planning. So as long as I stay outside of that box, I'm okay. I'm just concerned it would create a rule, and then you might still be very much butting up to the definition, but if you stay just a hair's width outside of it, it's going to be okay. So you have a challenge ahead of you which I very much appreciate, but that's my concern.
Thank you, Don. Jen, should we collect a few of these and you can then respond? Okay. So Hilda Blom, if you would come forward.
Good afternoon, it is for me, but good morning or good evening to others. Thank you very much, Jens, for your presentation, very clear, so much appreciated. And also many thanks for actually chairing this group, because this is not a easy subject matter at all to deal with. Thank you for all the work that you have put into it. And I think you made references to OECD, to certain directives in the European Union. So these are matters that obviously at Accountants Europe, we also have been looking at, and we think they can indeed help to steer this debate forward. I heard what Don said, and you will clarify, I'm sure, afterwards, but we did not understand that you would want to define tax planning or acceptable or unacceptable tax planning, but that you would work on a principles-based framework around this. And we believe that that is quite important. I think it has been tried before to define those terms like aggressive tax planning and other ones, or abusive tax planning, and indeed there are different definitions in different locations, in different cultures, and we think it's not possible to define. So maybe you could clarify that a little bit. It is really a principles-based framework that we understand you would like to work on. Whether everybody is waiting for yet another term or another word added to tax planning, and whether that's the one acceptable or not acceptable, I think that will need to become clear as you work through it, what it is that you would like to put in the principles-based framework. But overall, we would be supportive of an approach to have such a framework and to not define. And for professional accountants, whether they are auditors or professional accountants at large, this project is very important, because clarification will help to actually know as a professional accountant what to do, what not to do, but also to help the public perception around giving such an advice, and around the risks of that for actually the accountants. Because I think from an Accountants Europe perspective, it should be clear that we agree that as far as tax planning, it's not only about the letter of the law, but it's around the spirit of the law as well. And in the papers you were making reference to economic substance, that is important, and we would agree with that. There should not be just a reference to something which is just artificial or just trying to find loopholes. No, there should be a commercial or an economic substance, and then potentially something could be acceptable as far as tax planning is concerned. Now, as far as how you will do your work related to the framework, I guess you're still working around this. And if it is of any help to you, we have found that in Europe, as it is not possible to define that, something which is actually referring to, I would say, more specific abusive transactions by certain bodies, that might help to work around this. The OECD actually in their BEPS program, they have tried to do that, and they refer to hybrid mismatches and controlled foreign companies and permanent establishment status abuse, and very specific things. And in the European Union, there are those references to hallmarks of cross-border tax advice that are often signposts of abusive transactions, and and they refer then especially to the reporting, and maybe it will help to focus on or to concentrate on the risk of tax planning, that and make reference to what is considered as abusive transactions by the OECD or by others, and maybe that's a way that you could actually take your project forward. Whether that is what you have in mind or not, I do not know. Maybe you're not yet at that stage, but hopefully that's some useful insights from an organization that actually has already spent quite some time on these matters. Thank you very much.
Thank you, Hilda. Then we have Wei Meng from World Federation of Exchanges. Wei Meng.
Thanks, Chairman. Nice to see you all. Thanks for the work which has been done.
Wei, can you turn up your sound a little bit? Is there a way to do that?
Oh, sorry. Can you hear?
That's a little better. Yes, that's better.
Oh, I'm so sorry. Okay. Thanks. Nice to see you. Thanks for the work has been done by the task force. And it's not an easy work. And thanks a lot for Jen's presentation. And as pointed out by the workforce, the starting point in the analysis of acceptable versus unacceptable tax planning is that both in interpretation and in application. I agree with the conclusion made by the workforce that the legality and the economic substance of transactions both should be satisfied for acceptable tax planning. Apart from those two important factors, should rationality also be considered when doing the analysis? That is, whether this transaction has a reasonable business purpose. That's my first comment. Second is, I noticed that only transaction is mentioned in paragraph 14 of the agenda. I would like to know, is there any concern that non-transaction arrangement is not included? And that's all. Thank you.
Thank you, Wei. And why don't we pause here and give Jens an opportunity maybe to respond to those comments so far before we go to Paul.
Thank you, Gail. I'm very happy to respond. And first of all, thank you very much for all these very, very important remarks you have done. Just to start, perhaps, I would like to look at the OECD Enabler report and to make again clear where our project is focused. And I may cite here: professionals offer various legitimate business services to clients, such as legal and accounting advice. They may also be expert on finding legal loopholes, giving room for the creation for tax avoidance strategies. These strategies operate in the so-called gray areas of the law, allowing professionals to use the inadequacies or ambiguities of a jurisdiction's legal framework to maximize the tax outcomes of their client. The possibility of using gray areas of the law, while not technically illegal, should be limited by jurisdiction through the enhancement of their tax legislation and by fostering international cooperation. This is an area in which the OECD has been active, etc. So just to make clear, which I found very interesting to say, that the starting point is in each and every jurisdiction. So that's why we are only talking about legally accepted gray areas. So we are not talking about NOCLAR, and I think that's very important to make clear. If there's a non-compliance, we are in a total different sector, and we had it on the board discussion in March to make perhaps also this a little bit more clear, also in the tax area, where we are in the no-class sector and where we are in the, I would now just put it in the question of acceptable or unacceptable tax planning. That was my first remark. The second, it's very important to emphasize we are not dealing only about auditors or even accountants in public practice. We are talking also about accountants in business. That's very important. And that's why I mentioned at the beginning that for the auditor environment, we have with a non-assurance services project more or less covered a key issue there for the auditor doing tax advice in a certain gray zone. Coming to Dawn's remark, we don't, at that stage, we are thinking it's not possible on a global level to define what is acceptable or what is aggressive. I don't want to bother you with this differentiation of terms, but I think it's very important, and that is our approach, and that's quite close to what Hilde, what you said, to look at facts and circumstances which are indicators for a situation where the professional accountant has to be aware that it might be seen as an acceptable / unacceptable aggressive tax treatment. And by this principle-based approach, we would like to give to the professional accountants guidance or indicators to make a proper assessment of that risks, to inform the client, etc. So I think that is our approach we would like to have. Yes, and we are looking at the OECD publications. We are looking at DAC 6 of the European Commission or Parliament, and we are looking at a paper from the European Commission which is called Indicators for Aggressive Tax Planning. But we are very open for other sources. If you could provide us with other information, we would be very happy. And yes, these factors you mentioned, legal, illegal, economic basis, rationality, business purpose, these are all indicators which we are considering, and we are not just looking at transaction driven, we are looking also on non-transaction driven structures. I hope I have covered more or less your thoughts.
Thank you, Jens. Wei, did you want? Oh, you took your hand down. Okay, so Paul Munter from IAASB. Paul, floor is yours.
Thanks, Galen. A couple of things to maybe think about. One is kind of similar to Hilde and Wade's comments, which is, if you think about tax planning, for example, it gets back to the business purpose question. I mean, it's a very different circumstance, at least to my way of thinking, where you have a transaction that there's a business purpose associated with that, like a major acquisition, for example, and you want to try to structure that transaction in the most tax efficient way possible, as opposed to structuring something wherein the primary or perhaps only purpose is tax, I'll call it tax efficiency, might in fact be tax avoidance. So I think the business purpose is a very critical aspect of it in transactions or structures that the primary motivation appears to be tax minimization, might be an indicator that we're in a problematic area. The other thing worth considering is in IFRS, for example, as well as in US GAAP, there is recognition guidance for uncertain tax positions, both of which are grounded in a more likely than not recognition threshold. Now, the two models are not the same, but they are similar in that they are anchored in a more likely than not recognition threshold. So that might be another indicator or another direction that the task force could point in terms of what might be in the aggressive and perhaps unacceptable bucket.
Thank you, Paul. I thought we were probably going to touch on more likely than not, and I'm sure Jens is going to have some comments on that. It's where the task force is headed. But let's hear from Conchita next. Conchita? Are we on mute? There we go.
Thank you for giving me the opportunity to comment. I have to say that this project per se is a good one, but I do appreciate and share the comments of those who preceded me. More importantly, different jurisdictions have different tax laws, and practices also differ. More importantly, the cultural differences. The matter on optimization or probably coming up with very aggressive tax planning is a very, very old concern in any economy for that matter. And a lot of cases have been unfolded and prosecuted, and we all learned our lessons. So I just want to share that, and I wish the technical working group the best. It is a courageous initiative, and that's all I can say. It's a good initiative, and I wish you the best. Thank you.
Thank you, Conchita. And Daniel Pavas.
Hello, everybody. Can you hear me?
Yes. Yes.
Okay. I think I had expressed this before because it's a concern I have around all what a tax treatment in terms of public accountants mean. I think there is a fine line between services provided by public accountants and those provided by attorneys linked to public accounting firms. I believe that ethical risks affect them both, even in similar services such as tax planning consulting. But they are professionals who comply with different codes of ethics. I mean, there's a code of ethics for lawyers, or the code of ethics for professional accountants. But how this matter should be handled according to the IESBA code, perhaps this eventual overlap between the two types of professionals should be addressed with a little more clarity. I don't know. This is what I wanted to say. Thank you.
Thank you, Daniel. And Natasha?
Yes,
Natasha,
hi.
yeah, there you go.
Can you hear me? Good.
Yeah,
Thank you.
yes.
Sorry. Thank you so much for all of that discussion. And I really absolutely echo pretty much the majority of comments that have come before. I think this is a really, really important area. I thought it was nice to comment earlier about this being a courageous project. And maybe that's quite apt. I wanted to just flag a couple of things. There are some quite interesting tax principles that have come out of civil society, which I think are worth throwing into the mix. There's something called the Fair Tax Mark, for example, and they did a report last year, in fact, they were supposed to release the final this year, which may have come out. And it has 4 core expectations for companies. And I think those principles are definitely worth a look. They actually echo, I think, a comment made by Paul earlier around the motivation and whether the practices are intended ultimately to affect tax avoidance rather than anything else. The other, and I'd be happy to send a link to that, but I think you can probably find it. The other thing I was going to just comment on was this idea of grey areas. Because I think it's actually not as easy as saying, well, there's clearly non-compliance and there's clearly compliance and then there's grey, because I think the point about grey is it spans both. And in fact, within the grey, you will have non-compliance. And that is, I guess, worth just keeping in mind. So, I mean, we are looking also at activities that may well be considered non-compliant, but have not necessarily been picked up as yet. And there I do feel, and I know this goes well beyond auditors, but I do feel the auditors play a very, very important role here in flagging that to investors and creditors, that this is about statutory compliance or regulatory implications that could be material, as well as reputational risks that could end up being really rather material. So so yeah, I think that's quite important. The final point was just a question, really, because I think with that in mind, it'd be quite interesting to do some evidence gathering where you've had prosecutions around tax behavior at companies where the auditor has not flagged issues in the past at a time when those tax practices were still in place, and whether there's ever been any accountability there, because again, I do think this question of accountability is really important, and where things have passed through and not been flagged to not just shareholders and creditors, but also the general public, there should be some some kind of sanction of some sort in due course. Thank you.
Thank you, Natasha. Jens, I don't see, unless Daniel, did you have anything else to say? Your hand is still raised. Jens, if you want to respond to some of those comments.
Yes, thank you for all your very, very good comments. To Paul's comments, yes, I think the business purpose is one of the key factors we also see as very important. And you see, and that is an interesting connectivity, and we have got this feedback also from the National Standard Setters meeting last week, that the COVID situation has also impacted the perception of tax structures. As you know, in many jurisdictions, subsidies or help for companies where or are connected or under the condition that you are dealing or not dealing in a certain manner or behaving in a certain manner, for example, to have certain tax structures or relationships to non-complying jurisdictions. As we know, for example, we had this in my home country, where even the biggest European flight carrier has closed some subsidiaries in countries which were seen as non-compliant. So by that you see that also this environmental or reputational or outside perception is a very, very important factor. Yes, Paul, we have considered and looking at the IFRS and US GAAP more likely than not definitions, especially during our NAS exercises. We had spent a lot of time about the acceptable or which tax services are appropriate as performed by an auditor, and we can lean or get some fruit out of this discussion. Yes, Shrida, it is a encouraging project, and we are thinking, and that is very important. But I think that is, again, one key factor here. We are dealing with different jurisdictions and different cultures. And I think, especially in the cross-border structuring of taxes, we see a very, very important factor that accountants, whether in public practice or in business, have to be aware of these differences in culture and legal framework, because what is acceptable in one jurisdiction is not necessarily acceptable in another jurisdiction, and the environment and the perception of that is dramatically changing. To your point, Daniel, yes, we are aware of the problem that the IESBA code is only relevant for accountants and not for unregulated professions, but also not to attorneys. But we are thinking, as long as you mentioned the situation where accountancy firms are working together in multidisciplinary firms with attorneys, we think that the IESBA Code of Ethics is also relevant for them because they're working in an accountancy firm. But we are aware that in many jurisdictions there is a concern that having stricter rules to one profession, it would have a huge impact on the market of tax advice. But I think during our outreach activities, we had also heard from many stakeholders that it is something for the accountancy profession to show that there is a specific ethical framework, and that accountants are acting in a specific public domain and public interest, but we are aware of some difficulties in certain jurisdictions in this aspect of tax lawyers being competitors of accountants. To the evidence-based argument from Natasha, yes, we are witnessing in many jurisdictions nowadays different attitudes by prosecutors or enforcement bodies, and in Europe you probably know the cum-ex cases are of high public interest, and they started as just being in the gray zone, but courts have decided, because of the lack of economical background, that it is illegal. And we are aware of that situation, that perhaps in this gray zone, sometimes you are not sure whether you are in no law or in a gray part, which might be also okay, because two courts may also decide differently. But we have a significant increase of criminal prosecution towards professionals in some jurisdictions. And I can describe it from the perspective of my legal environment. In former times, tricky structures were seen by courts as interesting, and they would make their judgment, the court, and in the end there was no criminal suspect there. But nowadays, these are not anymore the tax courts who are deciding these cases first. Normally, the criminal courts are deciding the cases first because they are quicker. So we have a different attitude that criminal prosecution is starting. And even though in the end, professionals are not convicted, their reputation as being a part of a criminal investigation is often destroyed or in danger. So I think there is evidence that the environment and the acceptance by enforcement bodies or prosecutor has changed dramatically. So that would be my spontaneous response to all your valid comments. Is there anyone else?
That's what I see for now, Jens, if you wanted to continue.
Yes, please. Thank you, Galen. Next slide, please. We have heard also from Natasha accountability as a very important aspect. And we are looking at transparency and accountability. And we have put here on the slide some initiatives, and which we had also exchanged. For example, the OECD initiatives, G20 initiatives, which are now back on a, as far as I understand, good way. We have the principles for responsible investments. We have, for example, in Europe, the Tax 6 EU tax directive, and in preparation, there's a new one. And we have the global reporting initiative, GRI, and I mentioned earlier that they are including the aspect of transparency. And all these initiatives, for example, are looking for either a country-by-country reporting of tax burdens and tax paid, or disclosing tax strategies and disclosing their risk appetite or which tax philosophy or strategies reporting companies are following. And by that, giving this transparency, there is a different possibility also for the accountant to be not seen as an enabler of something, but being transparent and disclose any activities which might be seen by third parties as acceptable or unacceptable. And for example, the European initiative is making a progress towards a transparent and to give the information of certain tax schemes and tax structures to the authorities, but that they are able to react. It's not a real pre-clearance process, but in many jurisdictions we have even that. And by that, this transparency is, I think, one of the key possibilities to bring also the accountant in a more comfortable position. Next slide, please. We are agreeing that the ethical behavior of professional accountants in tax planning is driven by the conceptual framework and the 5 fundamental principles. Whilst there is no perceived lack of a general framework or fundamental principle of ethics applicable to tax planning activities, we think, and we were informed, that people are seeing a lack of guidance on how professional accountants can identify, evaluate, and address ethical risk related to tax planning. Certain professional accountancy organizations have provided to their own members guidance material in this area, and they have also indicated that the 5 fundamental principles are here interrelated. This is also broadly shared by practitioners. We have discussed with many stakeholders now which option we as a working group should take for our recommendations to the board. Next slide, please. You probably know this slide, and I just want to introduce it again. We have identified 3 possible options, and we have from March to now discussed these options with all of our during our outreach activities. Option A is to develop overarching material in the code to assist PAs to comply with the fundamental principles and to apply the conceptual framework. The option B is to develop material under one or more specific fundamental principle, for example, objectivity and professional competence and due care, to explain the expected behavior of professional accountants performing tax planning activities. And we have option C, to develop material outside of the code itself, Q&As, case studies, so non-authoritative material on the types and magnitude of the threats that are created in tax planning activities. It's quite interesting to see that we have got very different reactions from stakeholders. We have an equal split of support among stakeholders for option A and C. And it's quite interesting to look behind this, and we think that it has to do something with the jurisdictional approaches. Where the local jurisdiction has adopted more a rule-based approach, there is often a preference for option A, because they would like to see it in the code. Others have more argued that it's a principle-based approach, so there is no need of a direct intervention into the code, but there's an urgent need for non-authoritative material. We have also recognized that the views are varying sometimes on the background or the basis of the background of the professionals. So stakeholders who operates within the profession or close to the profession welcome very much option C. Stakeholders from outside the profession or from regulators, non-profit organizations, for example, Transparency International and others, are more in favor of option A, to see really something in the code which addresses the tax issues. For option B, we saw only no or even perhaps little support. So this is quite interesting to see, but also inside the profession, and we discussed this during the NSS meeting and also at the last board meeting, that from the outside, if people are looking from the outside to the profession, for some of the stakeholders, it's surprising that the whole tax area, which is a significant part of the work of an accountant in business and in public practice, we cannot find any notion of taxes despite the non-assurance services part, even though it is a very important part of the work of an accountant. So there is some expectation from outside stakeholders to find something in the code, but also from some of the feedback we got by individual conversations with practitioners, we saw some sympathy for some enhancement of the code for a better, how to say, enforcement inside the firms, because everyone is aware of the IESBA code in the auditing sector and in the independent sector, but in the tax departments or tax services lines, there is sometimes perhaps it could be good to have some support for those who are responsible for the application of the proper application, to have some support by an explicit mentioning in the code. We have heard also these types of reaction. So that is our preliminary view here, that probably we see as a task force, as a working group, sorry, we are not yet a task force, that perhaps a combination of option A and C could be something we will consider further, and we would like to explore whether, and if so, how the code can be positioned to play here a greater role in assisting PAs to assess the ethical and complexity risks relating to tax planning activities. That is what we have discussed with the board, and I would like to hear your views on that preliminary thinking of the working group. Next slide, please.
Okay, then, Jens, thanks for that, and we'd like to hear from just as many members of the CAG and the observers on their preferences as to what Jens has put forward there. I think combinations are certainly in order. If you can make your points brief, we might be able to get to as many representatives as possible. I would at the same time like to note that non-authoritative material, by virtue of coming from IESBA, does have some level of authority, even though we call it non-authoritative, and that's something to keep in mind. And the idea of what should and should not be in necessarily be in the code, I think is a subject that has been brought up before, and whether there's a need for some sort of framework as to how you make that decision. But we'll call for people to raise their hands and weigh in on the questions that Jens has posed. So Don, you're first up again.
Thank you, Galen. And thank you again, Jens. So the S&P AG has a preference for option C. And I think that there's a couple reasons for that. One, it has the benefit of providing the advice when it's required. It's going to be quite searchable, whether you are a professional accountant in business or in public practice. And it also can be quite nimble when change is required, you know, instead of going through the whole process of, oh, well, we have to make a change to the code, etc. You can react rather quickly and implement that in the authoritative guidance. Thanks.
Hyson? You have the floor, Hyson.
Yeah. First of all, thank you very much, James, for a good presentation and well-prepared material with regarding to the tax planning. Of course, it's a good support for accountants and others that are going to deal or are dealing with tax issues and tax planning in this context. With regard to the options, of course, I am for option C, which will be helpful considering that it should be applicable across different jurisdictions and with different cultures. But as you mentioned, the combination to put something in from the option 1 and option C will be the proper solution because we'll consider things from the different perspectives. That's my comment.
Thank you, Hyson. Robert?
Yeah, I agree with Hyson. I think you need to have a combination of A and C. And I know the concern with, A perhaps being a rule, and it's easier for a practitioner to go right up to that line in the sand and maybe avoid. But I think if you don't have something in the code specifically, I think you'd have a difficult time accomplishing your goal. So I think a combination as well. And I think this is a very good presentation, by the way. Thank you.
Thank you, Robert. Takeshi?
Thank you. Hi, everybody from Japan. Good evening from me. Thank you, Ian, the explanation. This question, last CAG meeting, I mentioned I prepared the option C. This position is still same, but in your explanation, you referred last week National Standard Setter meeting. Option C is for useful for the outside of the professional accountant professional. For example, my colleague explained in Japan the tax professional is another outside of professional accountant body. So such for those who are not in professional accountant application the guidance is researchable and useful and easy to read and find the guidance related to the tax planning and tax services. And so my preference still option C, but as your explanation, option combination with A and C could be a one solution. But at this stage, it is difficult to support option A because what kind of the revision, provision, the requirement of package material or sentence would be included in the code. So I still prefer C. Thank you.
Thank you, Takeshi. Natasha?
Hi, can you hear me?
Yes, yes.
Okay, great. Just to echo that, I think that option A makes a lot of sense, possibly combined with option C. One of the reasons that hasn't been noticed, so I concur with some of the points noted already, but in addition, I think, not to include this in the code, given it's such an important issue with regards to these questions of ethics and judgment calls would be a problem in terms of the credibility of the code overall. Thank you.
Thank you, Natasha. I don't see any other hands. Maybe you could take on these, Jens, with your response, and we'll see if some of the others. Please step forward and let us know what your preference is on this.
Yes, may I perhaps give some reflections to your comments? First of all, I would like to highlight also what we have heard from the national standard setters last week, that those standard setters who have published their own material in their own standards on tax avoidance, tax schemes, etc., are more preferring option C. Those who have not yet done this are more saying option A. And from regulators, we have heard that they would like to see something in the code for better possibility of enforcement, just that you are fully informed about the feedback. And we have also heard that perhaps it's a step-by-step approach to start with non-authoritative material, and in the way or during the way you are developing such material, we would have to look whether there is sufficient base in the code to pinpoint the issues, and by that exercise probably then come to the next step of giving further input to application material or other parts of the code. So that was a discussion we had during the National Standards Setters meeting, and I found it very interesting what Natasha also said. It is something, it is, one direction is the profession, yes, but I think the other direction of that project is also, and we have heard it from many stakeholders outside of the profession, that they were very, very positive that the profession is dealing with this issue and wants to deal with this issue. So the perception of having something, a discussion and having something in the code which is also addressing it in a public arena is of high importance.
Thank you, Jens. I see Christian has popped his hand up there. Christian?
Yes, thank you, Galen. So Jens, thank you from my side as well. And I think we at Accountancy Europe very much appreciate what you have presented today. And I think it is a very good point you've just raised, that we as a profession should be in the driver's seat and running this, to stand up and say this is the way we want to proceed. So I think nonetheless we should start off with option C, Jens, and consider how we can embed this into option A, as the previous comments have shown. I think this is a good way forward, starting off with C, and then with a more mature approach ending up in solution A and option A.
Thank you, Christian. Before we go to Shigeo, who has his hand raised, let me weigh in because I represent IESBA from the United States as well. And I guess I would echo some of the views, but I would start with A and, bring something into the code and then work the non-authoritative material after it. So my approach would be a little bit differently, but I favor A because of the enforceability aspect of my background and being able to really, if their focus is on changing behavior, I think you almost have to start with the code and then go to non-authoritative materials. But Shigeo, if you'd like to weigh in.
Okay, thank you very much, Galen. Before sort of commenting on the three options, I just want to convey the PIRB's view on this tax planning project. I think it's an important project, and I think the direction of the reviews of the working group has so far been very good, and I think we're having very good discussions with the CAG representatives today, and I think it will help the working group to carry on its tasks. But the comment the PIRB has, and I think it has been conveyed at various fora, including the CAG and the IESBA, is that the pace of progress of this project is a bit disappointing. At the same time, we are fully aware that this is a very, as someone said, challenging task. It is very difficult to have a global sort of view on this tax issue, where different jurisdictions have different laws and different culture, etc., which has been mentioned. So it is difficult, but it's I think in order to expedite the process, sometimes you may have to come up with some pragmatic approach. With that in mind, with these three options, I have to say that the PIRB has not sort of considered fully about the proposal of the combination of A and C at this moment. So I'm not talking on behalf of the PIRB, but if I may talk my personal view, I think this combination approach might be worth considering. It's because on the one hand, PIRB is asking for a more quicker progress of this project, but it is because it is an important issue. You can't continue to discuss forever. So if you want to have some kind of solution, maybe you need to think about a pragmatic approach. And I must say, I have to emphasize that this is my personal view, and it's not my official view from the PIRB. But anyway, thank you very much for the good discussions.
Thank you, Shigeo. I don't see any other hands, Jens, if you have other comments on this.
Yes, thank you, Shigeo. We will now, and that is one of the last slides to share with you. We are now preparing our preliminary report to the board in June. So we are just 3 months behind our schedule, but we are still behind. So I agree it is, but we had quite challenges to get outreach activities done virtually and not in person. And okay, just to highlight perhaps only 2 issues before I'm coming to the content of this slide. The criticality of professional development I mentioned, and by that I would like to give you a flavor where we have very quickly discussed on board level in March, where we can perhaps look in the code for examples how to deal with similar situations. So we have to look at the no-CLA part of the code, whether there is something to be clarified concerning taxes. We could look at inducements, because there the aspect of perception by third parties on a certain behavior is addressed. And the third aspect we discussed is the role and mindset project, you all know, which is also relevant to all accountants, and not only the professional skepticism for auditors, where we can perhaps look at the behavioral aspect which is relevant also for situations we are discussing in this project. So this is something we want to consider and see whether we can find there parts in the code or examples in the code where we can add or get use for our tax project here. What we are at the moment considering, these are different existing guidances and publications. For example, the European Commission published indicators for aggressive tax planning, which we are looking at. We have looked and we are looking deeper now at the professional conduct in relation to taxation from the UK authorities together with the profession. And last but not least, we are looking at the IFAC guide for PAOs, which was published last year, which is on developing good practices for members providing tax advice. And we would look at these documents and see how we can use this for our project here. Yes, and as I mentioned, our next steps are a preliminary report in June, in June, and a final report hopefully in September this year. And then the board has to decide which way we go forward. So we are a working group, so we are looking for the options and the possibilities, and then this, depending on how the board will decide, we will have a task force implementing then these recommendations. I think with this, I have finished my presentation, Gail.
Thank you very much, gents, for that, and we'll look forward to the next steps going forward as this moves along. So we're just a couple minutes before our break. Why don't we go ahead and take our break then now for 10 minutes? So we'll come back at right before the hour. Jeff, it's been 10 minutes, but I think there's probably still people on their break, so we'll wait a few more minutes. Looks like everybody's popping back up now. Okay, why don't we get started? I see everyone logging back in, so I think we're probably good with that. Our final session is going to be on the engagement team and group audit independence, and Carolyn Lee, who is the deputy chair of the board and also a member of the task force, is going to take us through that conversation today. So Caroline, if you want to go ahead with that, it'd be great.
Thanks, Galen. Good day, everyone. And so in this topic or this project on engagement team group audit independence was last discussed at the CAG meeting in the September-October meeting. So in the appendix to agenda paper B, we have a report back on the CAG discussions, but as we go through the presentation, you have the opportunity to raise or discuss some of those points as well. So Diana, if you can go to the next slide. Yeah, thank you. So the objective of this session is really to provide the CAG with an update on coordination activities with the IAASB's ISA 600 revised task force, and also to provide feedback or to receive your feedback on the task force proposed approach to addressing the issues in the project and other identified matters. And on the next slide, we then have the agenda. So firstly, the update on the coordination with ISA 600 task force, and then specifically looking at definition of engagement team, independence consideration for engagement quality reviewers, both of which were discussed in the previous meeting. Then we would also seek your views on the task force thinking around breaches of independence requirements by the component auditor. And lastly, ending off with matters for further consideration by the task force and next steps. So on the next slide, so in terms of coordination with the ISA 600 task force, there's coordination at two levels. At the level of the staff, so the IAASB staff versus the IESBA staff, they have bi-weekly catch-ups to see where each task force is at in their progress. And also, as each task force progresses, we have joint teleconference between the task force chair and the staff at a minimum. So in addition to the February teleconference that we had, that was Q1, we also had another joint session in May. And so the matters that were discussed in Q1 revolved around the definitions or the terms, engagement team, group engagement team, which then has moved on to be group auditor and component auditor. We also looked at ISA 600 task force areas of focus, noting that they focused on group financial statements, the definition of component auditor and the concept of a significant component. The ISO 600 task force is still aiming to have the standard approved in December of 2021. And in the June meeting, that would be when they will bring back to the IAASB the revised standard, taking into consideration the comments from the exposure draft. On the next slide, just going into the definition of engagement teams. So this was covered in the previous CAG meeting, and just a recap that in our extant code, our definition of engagement team is taken from the ISAs, and the ISA 220 revised has a revised definition, and those wordings in red indicate where the changes are. And in ISQM1, there's also a reference to engagement team, and the difference is really the word engagement. So all partners and staff performing the engagement, and any other individuals who perform procedures on the engagement, excluding an external expert and internal auditors who provide direct assistance on an engagement. So this exclusion of external expert and internal auditor who provides direct assistance on an engagement is something that has already been approved and is in ISA 220. And so on the IESBA side, we don't really have much leeway or room to vary the definition. But there are other standards that deal with experts. So ISA 620, I believe, would be the standard that refers to that. So following the wording of what's in ISA 220, we have then proposed to include the words perform assurance procedures to bring it in line with what is in ISA 220. And one other point to highlight is that in ISA 220, in A17, when they're talking about engagement team members, they are also looking at individuals not only from within the network, but also from a firm that's not a network firm or another service provider. So those are things that we have to consider as we look at the independence of the engagement team. So on the next slide, this is how we propose to change the definition of engagement team in the IESBA code. So the markups, as you can see, are very much aligned with what is in ISA 220. And the deletion of the text around excluding individuals within the internal audit function and is actually really just to be aligned with ISA 220 as well. So at this point in time, I would like to see if there's any comments, but recognizing that we don't really have much room to maneuver in terms of the definition of engagement team, but that was where the board has landed. So Dinah, if you can just go back one slide. Thank you.
Thank you then, Caroline. If representatives have some comments, and I'll weigh in as we're waiting for some of those to pop up. Caroline, I really do like the pointers at the bottom. When I say pointers, I mean the references to 4A, 4B, 220. I think that is helpful, the way that is constructed. I did have one minor thing, and that is this reference to providing directed assistance on the engagement. Well, it's silent about indirect, so I wonder whether you even really need the word or the modifier direct assistance. I understand the meaning there, and I get it, but it is silent on indirect, and as somebody involved in enforcement, I always, you see people trying to work around these words with the behavior, but
yeah.
I don't see any commentary. We'll give it a second more, but do you have any thoughts on my brief comment?
So Galen, we are taking the text word for word from ISA 220,
right?
And that's exactly how they've expressed it.
I get it. We do have some people weighing in.
Yep.
Christian.
Yes, thank you, Galen. Just very brief, I would have added the same comment you have just raised, Galen, but also with respect to the proposed definitions on audit team, review team, and assurance team, because this builds upon this. So I at least want to support your comment, Galen.
Thank you, Christian. And Paul Mentor.
Yeah, thank you, Galen. I guess mine's fairly similar as well. I think, and Caroline, I think we were speaking this. I think it's very important that the definitions are aligned. Things like engagement team, obviously, is kind of first and foremost. That the definition in the code, in the QM suite and ISA 600 need to end up being aligned. That's an issue we run into in enforcement and the like, where you have same term is being used differently in one place versus another. So I applaud your efforts to work very closely with the ISA 600 task force and achieve an aligned definition.
Thank you, Paul.
Thank you.
And Natasha.
Thank you, Galen. And thank you also, Caroline, for that presentation. I, at risk of being a little bit controversial here, but alignment I would agree with as long as we're aligning on the right thing. So I guess my question, and it may be that I'm poorly informed here, and I apologize for that if it's true, but and maybe it is a bit like Galen's point about indirect, but to exclude external experts, I just wonder about that, because, if we're talking about ensuring independence, I have certainly seen instances where the external experts are quite influential. And if they have a conflict of interest, that's material. Thank you.
Thank you, Natasha. And Takashi?
Thank you, Galen, and thank you, Caroline, the explanation. I just briefly, I echo Paul's comment. The alignment between the two boards, same definition using in the standard, it's very, very important. So thank you for that task force effort. The direction is I will support. Thank you.
Thank you. Christian, did you have anything else, or to take your hand?
Yes, correct, Galen. Thank you very much. I just wanted to respond to Natasha, because I think that was the point I would have made later, because we do include external experts and internal auditors. We exclude them from the engagement team definition. But the question is that the right way? We do see this in the standards currently, but going forward, and I'm now jumping, but this is exactly referring to Natasha's comment, is that we say, for example, audit team, we have the engagement team, which is defined here, and then we have all others, or engaged by the firm. And then the question comes up, which was raised by Natasha. So external experts engaged by the firm, are they subject to this definition, yes or no? So I think there needs to be, at least from my perspective, some clarification. Thank you.
Carolyn, if you want to respond.
Okay, thanks, Galen. Thanks everyone for your comments. So on indirect assistance, I mean, I think that's something that we can certainly the task force can certainly look into. There isn't I don't think there's an intention to allow any circumvention or anything. In terms of external experts, and Christian was right in that we actually address it in a way in our definition of audit team, review team, and assurance team. And so maybe if we can go on towards the next section, which are changes that actually were meant to deal with engagement quality reviewer, and in making the changes for that. So Diana, if you can go 2 slides down. Yeah. So in trying to deal with engagement quality reviewers that might be outside the firm and the network, so ISQM2 actually allows for external engagement quality reviewers to be from outside of the firm, to be engaged by the firm. And as a result, in trying to address that, we've then the task force has proposed some wording to the definition of audit team, review team, and assurance team. So if we look at the next slide on audit team, so in B, we've actually then added in or engaged by the firm specifically for that purpose, and B3, focusing on those who perform quality reviews for the engagement, including those who perform engagement quality reviews. But to Christian's point, if you look at B2, for example, those who provide consultation regarding technical or industry-specific issues, transactions, or events for the engagement, you could have an external expert engaged by the firm coming in under being part of the audit team as a result of B Roman 2. So whilst they are not members of the engagement team, they are caught within the wider definition of audit team, and the same goes for review team and for assurance team. So if we can move down 1 slide, you'll see that it's exactly the same wording that we've tracked for review team. And on the next slide, it's the same definition for assurance team. If we can go forward 1 slide, Diana. Thank you. So, so hopefully, Natasha, that this change would help address the concerns that you had expressed earlier about the exclusion of external experts.
Caroline, if I might interject here, would it be helpful in under B2 if the word experts were actually inserted somewhere in that language, because it has such a significant, when you think of experts, I mean, it has its own definition, right? And now we're talking about consultation, but in reality, what you've described here is that would scope in experts, would it not?
Yeah. So I think the other point to note is actually the start of B, where the focus is those who can directly influence the outcome of the engagement, whether it's audit, review, or assurance engagement. So that I think is another important consideration as well. So the inclusion of external experts, I can take it back to the task force, and but you know, the key point is about those who can directly influence the outcome of the engagement. So in terms of an external expert, they provide inputs to the engagement team, and it's still the engagement team that at the end of the day makes its judgment and its decision.
Carolyn, we have a couple, you know, it's probably on this point. If you don't mind, maybe pausing right here and taking those queries. Did you want to move forward before we do that, or?
No.
Okay, so Natasha?
Yes, thank you. And thank you for that clarification. It's just a follow up, really. I guess the question is whether the requirements for each of the different categories are the same, because why break them up? In other words, you're breaking them up presumably because then the requirements differ between them, and therefore if there's a lower standard for those who are providing input but can be extremely influential. And yes, you're absolutely right, and I take the point that the internal engagement team will ultimately vet what the experts will be telling them, but they're getting the experts because they don't necessarily know themselves, so it will be hard, I think, and we've all sort of seen that play out in reality. You know, it's hard to judge whether a piece of expert advice is biased in any way, because that's why you're getting the expert to give you the advice. So I think that can be, you know, provide a false sense of security. And so I just wonder whether therefore the standards that are required between the different groups are the same.
Thank you, Natasha. Then Christian.
Thank you, Natasha. I think this was exactly the point where I was getting to. If we look at the word directly influence, if you engage an expert, is he influencing, or is he more or less directing you in terms of influencing your decision or your opinion? So I think, Galen, this was perhaps also what you've tried to point out with the word directly, in the sense we are discussing here now, because this is no new language. It is only the term "or engaged by the firm" which has been added here. So I was wondering how this works together with engaging someone who's then directly influencing your work product.
It's a subtlety, isn't it?
Yeah.
What do you mean by influence, so forth. But Ken Siang, I see your hand is raised. Ken is technical director of the board. Ken.
Yes, thank you, Galen. I just wanted to provide a clarification, and as Caroline says, we will take on board the comments with regard to external experts. But the concept of an auditor's external expert is actually defined in ISA 620. And it is not exactly what is intended under subcategory B2 of the definition of audit team. There is a bit of overlap, I would say, but if I were to just quote a part of the definition of an auditor's external expert in ISA 620, and that says that it's an individual or organization. So already here we're talking about not just individuals, but organizations that possesses expertise in a field other than accounting or auditing, whose work in that field is used by the auditor to provide sufficient appropriate audit evidence, or to obtain sufficient appropriate audit evidence. So there is a bit of overlap, but it's not entirely covered within subcategory B2. The comment regarding external experts has been raised at the board as well, and the board has acknowledged there is a question on the table regarding this group of individuals, and it is something that the board has agreed that it will further consider when it considers the future strategy and work plan, in respect of which it's gonna commence preliminary work towards the end of this year. So that is a topic that is on the table for further consideration. Caroline, I'll let you deal with Natasha's other comment with regard to whether the independence requirements applicable to the various categories A, B, and C are the same or not. Otherwise, I can happily come in on this one as well.
Okay, thanks, Ken. So Ken, thanks for highlighting that with respect to the independence requirements for external expert, the board actually agreed that this matter was outside the scope of the engagement team group audit independence project. And so IESBA will consider the matter, whether there's a need for development as part of a future project under our strategy and work plan for the next round. In terms of the Roman 1, 2, and 3, whether they are the same or they're different, it actually is different. So in the sense that the role that each of these groups play and how they influence the outcome of the engagement is different. So in terms of, if we start with B Roman 1, it's about the compensation and the performance assessment of the engagement team. So those who are involved in, directly recommending the compensation of the engagement team members, and in particular the engagement partner. And in terms of B Roman 2, it would be those that provide technical consultation. And in B Roman 3, the engagement quality review is meant to essentially assess whether the engagement team has carried out their work in accordance with the quality standards and in compliance with the professional standards. So the three roles are quite different.
Gayla, may I just jump in just to clarify my question from earlier?
Yes, absolutely, sure.
Sorry, it was not so much between these three Roman numerals, then whether there are different requirements between the engagement team, the review team, the assurance team, because what you've done is you've taken the experts out of the engagement team and you've put them into a different category. And I want to understand how meaningful that is in terms of the requirements.
Right. So the reason for having the definition of assurance team, review team, and audit team is really because there are different parts of the standards that deal with assurance as opposed to audit and review. So part 4A and part 4B, and we wanted to be able to have clarity on what we meant in respect of each of those types of work that's undertaken. And in terms of external expert, like what Ken has mentioned, it's actually covered under ISO 620.
Carolyn, if I might interject on this issue of experts, this is an issue that's been around a long time within the profession that a need to clarify. And I'll just give an example of that I've seen, and that you could have an audit client considering whether they need an expert, and the audit firm thinking the same thing, and they identify jointly an expert. And then the question is who is engaging them? Is it the audit client or is it the audit firm? And in one instance, there might be independence required, and in the other instance, independence wouldn't be required. And so you have a bit of a dilemma there as to, just making the choice as to who hires the expert would have a direct impact on whether independence is required. And that seems to me to be a problem that does need to be addressed. There needs to be some consistency with that.
Thanks, Galen, for the clarification. So what I've seen in practice is actually it's, if there is a need for, say, a evaluation to be done and evaluation specialist to be engaged, the client has to engage their own valuers, and then as part of the audit team would either have their valuation specialists, and that's where we sort of benefit from a multidisciplinary model in that firms would then have the skill sets within their advisory teams, for example. And if they don't, that's when the audit engagement team has to go out and engage external experts to advise them. So that group then would be working solely for the benefit and under direction of the audit engagement team. So I've not, I mean, I think in maybe in recent times, it has been quite clear that separation, the need to separate the two. So the auditor cannot just rely, on the expert that the company, the audited entity has engaged on. Ken, do you want to weigh in?
Ken?
You're
Yeah,
on mute, Ken.
I'm sorry. No, not intending to make this a discussion about experts, because as you indicated, Caroline, this is outside the scope of this project. But just to perhaps just provide a bit of context, the topic of experts is addressed very extensively in the auditing literature. There are in fact two ISAs that deal with experts. On the one hand, auditors experts, which is within the remit of ISA 620, that deals with the auditor's use of the work of an external expert. And there is ISA 500, which deals with audit evidence. And that ISA 500 deals with the use by management of an external expert. In other words, management's expert. So however our board decides to address the topic of experts, there will need to be some coordination with IAASB to make sure that we draw the lines clearly between those two categories of experts. On the one hand, the auditor's external expert, and the other hand, management's expert. And as I said, there are two different ISAs that will deal with the topic of experts, and we don't want to be inconsistent in that regard. To the extent we can, we should be aligned with the approach taken in the IAASB standards. But as I say, maybe we postpone that discussion to a later stage when that topic comes back again on the agenda.
Thank you, Ken, for that clarification. Carolyn, we're ready to go forward. I think we've exhausted this.
Okay, thank you, Galen. So Diana, if we can move ahead. So the next part is really the discussion that the task force had with the board in our March meeting around breaches of independence requirements by the component auditor. And in ISA 600 revised, the component auditor can be within the network or can also be, a firm outside of the network. And so in our code currently deals with breaches of independence as it relates to the firm and the network firm. And so in that way, it just deals with component auditors that are within the network. And even then, it's not necessarily in their capacity as component auditors, but just really in being part of that network. So what we so in the code in R400.80, we already have a requirement dealing with breaches of independence. And so if it is a component auditor inside or within the network, we can use that to address how breaches of independence requirements by the component auditor should be dealt with. But the current gap is really then in terms of breaches of independence at the component auditor level. And so the task force has put forward that a breach of independence at the component level, auditor level, does not automatically translate into a breach of the group auditor's independence, where the component auditor is from another network or from a firm outside of the group auditor's network. And so the task force has then put forward that this breach of independence at the component auditor level can be addressed via additional actions and safeguards by the group auditor for purposes of the group audit. So if we go to the next slide, it will show you how we view it. So starting with the component auditor identifying a breach of the independence requirements relevant to the group audit, they would then have to evaluate that breach, the significance of that breach, and they would have to communicate locally within their firm and think of what actions are needed, such as to terminate that engagement, to suspend their work, to eliminate the threat that gave rise to the threat to independence that had arisen. And it's also important that whilst they do this evaluation as it relates to them as a component auditor, that they also communicate this breach, the details, the evaluation of the impact of their independence and objectivity with the group auditor. So there's a need to report to the group auditor. And this reporting to the group auditor, this communication is important for the group auditor then to evaluate that breach, to determine whether that breach, taking into account any actions that have been taken at the component level, or whether there are any actions that can be taken at the group auditor level, such that it has an ability to allow the group auditor to continue to rely on the work of the component auditor or not. So at the end of the day, the consideration is the role and the significance of the component auditor and the work of the component auditor in the context of the group audit. And if we go to the next slide, 3 possible scenarios or outcomes that the task force had put forward to the board was the first being what we loosely term as inconsequential. So we're not, the intention is not to use this language in our drafting, but it's really to formulate in our minds the extent of the impact. So where the breach at the component auditor level is inconsequential and can be addressed with safeguards by the component auditor, then that would be the first scenario. The second scenario would be where it's a significant matter that requires the group auditor to perform additional work in order to be able to still rely on the work performed by the component auditor, so as to overcome mitigate the breach at the component auditor level. And the third would be where it's a very significant matter that the group auditor cannot rely on the work of the component auditor. And so this results in the inability to gather audit evidence from the work that was done by the component auditor, requiring a re-audit or the component auditor to, the group auditor to perform those audit procedures or engage another party, another auditor to carry out those audit procedures. So those are the 3 scenarios that the task force has put forward. And in the ISO 600 task force work, when they looked at breaches, they were actually suggesting certain actions to be taken by the group auditor. And in the discussions between the 2 task force chairs and the staff, we we came to an agreement that in terms of the breaches, it should really be dealt with within the IESBA code, how independence breaches should be handled, and in ISO 600, it should refer to the IESBA code for the relevant ethical requirements for how breaches are to be dealt with. So in doing so, we don't overstep each board's remits, but at the same time coordinate our efforts so that there's clarity on what actions should be taken by the component auditor as well as the group auditor. And so we also had a discussion with the ISO 600 task force to highlight to them that in their current draft, there's communication from the group auditor to the component auditor. But in the case of breaches, we actually think that there is benefits in two-way communication, so that communication should also be between the component auditor with the group auditor rather than just a one-directional way of communicating. On the next slide, we then the task force then discussed with the board about the communication to those charged with governance at the group audit level. And so where there's a breach of the independence requirements relevant to the group audit, and if that happens at the component auditor level, the task force is of the view that there should still be communication to those charged with governance, and it's the group auditor's determination, depending on the significance of the matter and any requirements that those charged with governance might have set out or requested. So this communication with those charged with governance is aligned with the ISO 600 as well, subject to further coordination. So at this point in time, I would like to receive any comments that the CAG members might have on the various proposals around breaches of independence requirements by the component auditor.
Thank you, Carolyn. And let me go first again here. I support almost everything that I see here. I do have an observation or two. Back on page 13, Diana, if you can go back to that, where we're talking about the distinction between component auditors inside and outside of the network. When I read that carefully, I don't see any difference between the two. In the first instance, it says level may impair, and then in the second instance, it does not automatically translate to a breach. And so I wonder whether or not there really even needs to be a distinction. It seems to me like the effort here is on inside the network to make that more rigid or stringent than a component auditor outside of the network. But I think the focus should be on what the function is. If the function of the component auditor outside of the network is on the meat of the audit, I don't know why it would be any lesser of a key. So I guess that's the one observation that I make there. And I'm not saying that that's where the task force is heading, but that's the impression that I got simply from reading through that particular slide. We do have some hands raised, though. Natasha, if you want to go first. Natasha?
Yes, excuse me for being so vocal today. Really, really important issue. So this is not to suggest, I mean, I'm really pleased to be seeing this work going ahead. I also had the same point as Galen, and then I had a second point, which is in your next slide, where you show the process. Clearly, from a behavioral perspective, there are conflicts of interest here, right? The component auditor actually has risks losing this work, right, and being sanctioned and being replaced. So they really have no interest in escalating or finding breaches. So I'm just interested in the thinking around that. Likewise, depending on the significance of this component auditor's work, it could be extremely disruptive at the group level, and therefore there could be some conflicts there. So I'm interested in that, how that's managed, how you get sort of, and I don't want, we're getting into auditing, the auditing process, but how you just make sure that these breaches do come to light. With regards to that, transparency around breaches to the ultimate client, who are shareholders, be really interesting to understand how those are reported out, or whether it just goes to the audit committee, that kind of thing. Yeah, well, maybe I should just stop there. Thank you.
Thank you, Natasha. And Klaus Norberg.
Thank you, Galen. Well, I had the same observation as you, Galen, on the distinction between being inside or outside the network. I really don't see a distinction there. So I think it should be the same principle that applies regardless of if it's a potential breach outside or inside network. Thanks.
Thank you, Klaus. And Daniel?
Yes. So wait. I think it's okay. You hear me, okay?
Yes.
Okay. Of course, the component auditor must assess any breach to independence and bring it to the attention of the network. I mean, when the component auditor is part of the network. But it would seem as if it were the only way to assess any breach of independence in the CA. However, it is clear that the group auditor must also perform tests on the performance of the CA. I think it should be pointed out in the document. Thank you.
Of course, the component auditor must assess any impairments to independence and bring it.
I'm not sure what background we're getting there. Wei Ming, if you'll step forward.
Thank you. Thanks, Galen. Can you
Yes.
hear me?
We can hear you. Yeah.
Okay, thank you.
You're good.
Just a quick comment. Thanks for the presentation, and it's very fine. Just this slide, I would want to see in order to identify the breaches by component auditor. It is important to consider the role and the significance of the component actor work in the context of group audit. And in my view, it is also very important to identify the role and significance of the member or the subsidiary of this group under auditing of this component editor. Although those two aspects are correlated, but they are not the same. Sometimes the importance of this component is more important. That's all. Thank you.
Thank you, Wei. And Jim Duncan, James.
Thanks, Galen. And my question was, if you look on the graphic on page 14, which you're on, in terms of the evaluation that the group auditor does, is there application guidance in terms of providing guidance on how that evaluation should, pop that component auditor in or out of a independence issue, or is it just at that very high level?
Thank you, Jim. And Takashi has a comment.
Thank you, Galen. And I have one observation. This might be a little bit from high-level perspective, but again, first of all, thank you for the task force great effort on this very, very complex issues. And as I said in the last CAG meeting, I think this issue itself, this project itself, very, very complex. So I think the consideration of this issue would be automatically become complex by this issue itself. In that sense, I think the principle-based approach is very, very necessary for this project. So I think the baseline is important. This is my baseline. That is those who perform audit procedures and those firms which are involved in the group audit independent to the entire group of the entity that which are subject to the audit opinion. For example, this issue and also as well as last CAG meeting, the task force explained the non-pi on pi group audit, group entity of pi or non-pi, and the component auditor is outside or inside the network. And such kind of a lot of variation, the scenarios that we can imagine, but to try to write each scenario, the example in the code, this might result the code become more and more long and prescriptive, and it is not easy to read and understand, and not for the regulator. It is not. It is okay for the prescriptive the provision and a lot of provision written in the code. It is very helpful for when we enforce the engagement. But I think that this issue is itself very complex, so that the task force take into consideration the principle based approach should be remained in the code. And in that sense, the consideration of this issue, especially the breaches independent requirement component auditors, is very, very useful to have the practitioner as well as the regulator consider how to tackle the breach of independence at component level, but to try to include these consideration to the code, it's not reasonable and feasible. So I think this should be outside of the code, and it should be encourage task force to consider and make some guidance outside the code. This is my observation. Thank you.
Thank you, Takashi. And then Hilda. Hilda?
Thank you, Caleb. I hope this works, yes.
Yeah.
Very quick comment. Thank you very much to Caroline and to the task force for the work they have done so far. And especially on this slide, the gray box, the consideration of the role and significance of the component auditor's work in the context of the group audit is very important, and we believe that is really key. And from that, based on what you have proposed, we would be quite supportive. We think based on that, it actually makes quite a lot of sense. So overall, we're supportive, and thank you very much for the work you have done.
Thank you, Hilda. Caroline, you want to respond to some of those comments?
So, Galen, I think Asha has a comment as well. Maybe.
Oh, I saw it just popped up. Thank you,
Yeah.
Asha.
Thank you, Caroline, for the presentation. Just a small observation that I wanted to share. When it comes to the three scenarios, you have three scenarios of breaches of the component auditor. What came to my mind is, how would you expect to segregate the terms inconsequential and significant and very significant? Because I think there are three different ways you have to address it in three different ways.
Thank you, Asha. Okay. Jim, did you want to come back? Did you have something else? Jim Dalkin?
No, he doesn't.
Oh, okay. All right.
All right. Thanks everyone for your comments and feedback. I think it's really useful for the task force. So just going back to slide 13 about the component auditor inside and outside of the network. So the difference is really that within the code currently, we do have provisions that deal with breaches by the firm and network firm. So if that component auditor is within the network, there are already existing provisions to guide the how the auditor would deal with that situation. But there is a gap in terms of a component auditor outside of the network, because this whole idea of component auditor isn't really something that is embedded within our code. The code actually is more, I guess it's more catered towards the group audit as a standalone engagement, and each component audit being a standalone engagement. So that is where we've identified that there is a gap that needs to be dealt with, and so the reason why we say that, you know, in the case of the first, it may impair the independence, because we really have to look at the facts and circumstances, whether there are safeguards, at the significance of the threat, whether that threat is at an acceptable level, and whether there are safeguards and actions that can be taken. So within the current code, there's already quite extensive application material to help an auditor deal with that. So I think this then also deals with the comments from a few of the other members as well, in terms of how the evaluation should occur, which is James' question. So as I mentioned, within the code, it does set out some guidelines, and it also sets out the extent of reporting that's currently required. So that extent of reporting will enable the group auditor to discuss with those charged with governance, and have a meaningful discussion of the breaches. And so to Natasha's question about conflict of interest and the component auditor not wanting to highlight these, so there is a requirement for confirmations, and we think that would be that process of highlighting, and that confirmation could be at the start before they undertake the work, or it could be in the course of the audit engagement, as well as before the sign off, because there could be a breach that occurs in the course of the audit, and it does give rise to disruption, and so there is this need for emphasis on timely communication to the group auditor. Transparency to shareholders would be through those charged with governance, the communication to those charged with governance. And Natasha, you had a question about whether to date, is there any indication on the frequency of such breach reporting, and the number of times this has led to change in component auditors. I would think that we don't track that information, but just reflecting back on my practical experience, I have come across a number of situations where there have been breaches within the firm and within my network firm, where we've had to report to those charged with governance, and oftentimes we've agreed with those charged with governance the frequency of that reporting, the timeliness of that reporting, depending on the severity of the breach. So very grateful to hear that this idea of considering the role and significance of the component auditors' work being something to consider, and definitely the role or significance of the component should factor into the significance of the component auditors' work. as to the three scenarios and the terms. So Asha, we're still trying to work that out. As we draft, we will have a better understanding of how we differentiate the three scenarios. And I think Takashi had highlighted that it's difficult for us to draft, but I think the task force will try its best to build using a principles-based approach, build requirements and application materials within the code and supplement with non-authoritative material to the extent that it's required. And so, Galen, back to you.
Yes, I see Shigeo has raised his hand. I want to make sure he gets an opportunity to comment.
Oh, okay, thank you very much, Galen. And I thank Caroline for her presentation, and PIRB commends the proposals presented by the task force. I think it's in direction of travel is good. And I also welcome the discussion that the CAG representatives have made during today. I think it's good discussions. I think the only comment PIRB has is the point that was just mentioned, is the complexity of the requirements. I think it is very complicated. You have to think about various definitions, etc. At the same time, we think that the standard needs to be very clear and understandable to be in the public interest. So I tend to agree with what was mentioned by Takeshi. I think we would prefer a principle-based code, and and I welcome Caroline's explanation that non-authoritative guidance are being considered. I think that should be welcome. But thank you very much.
Thank you, Shigeo. Caroline, so we're getting close to the quitting time. If you wanted to maybe try to wrap up here with some final comments, and we'll hear from Stavros if he has any as well.
Okay, thanks, Galen. Diana, if we can move forward. So on slide 18, these are matters that the task force would still need to consider. In terms of service providers, also components, how the ISO 600 would identify or deal with components, how they define components, and also the implications arising from NES and fees provisions in the context of group audits. And I think that's where the complexity comes in terms of related entities and the fact that when we look at independence, we're always looking in terms of independence vis-a-vis an entity, a legal entity, whereas when we're looking at ISO 600 in terms of component, that component might cut across multiple legal entities. So that's something that still needs to be addressed, and we will take the lead from where the ISO 600 task force goes with their definition. And just moving on, so the next steps would be discussion at the June board meeting, and then we'll continue to have our joint sessions, joint meetings between IAASB and IESBA, and we hope to then bring to the board in December our proposals. And on the next slide, it then just shows the activities that we've undertaken in the second quarter of 2021. So the stakeholder meetings that we've held, and Sylvie Soulier, who's the the task force chair for this project. She's actually had a call with IOSCO, a presentation to IOSCO, and that was the reason why she's not able to to present to the CAG today. So with that, Stavros, I'll hand over to you. Thanks everyone for your inputs and your comments. They were very helpful.
Thank you very much. Just a few words from my perspective. First of all, I want to thank Caroline and Jens and the staff for the presentations, and very much would like to thank CAG members for very valuable comments that I believe are extremely helpful. Just a brief word as to IESBA's general progress and pace. Since we met in a physical meeting or a hybrid meeting last March, business has not been as usual, as you all know. Things have slowed down, things have become more difficult. And in addition, of course, we had the objective of finishing our two very important projects on NAS and fees, which we did. That is, of course, that combination of circumstances is one of the factors that some things have slowed down as the tax project, but we're really managing the delays, and we're not speaking about big delays. We're speaking about 1 quarter here. So I just wanted to say that we're trying very actively to regroup and regain momentum now that little by little it seems that difficulties are going away. One point I have about the project we were just talking from a more strategic perspective, to my mind, the most important point is one that I believe Paul Munter made before, that this project was not part of our strategy and work plan. It is an additional project that we started. I know most of you know that we started precisely because of the work that was going up in the IAASB with 600, with ISA 600. And therefore, the overarching need here, and the overarching word is coordination. And both boards are aware of this, and clearly there are some things that each board might do a little differently if they were on their own, but we have, I think, to submit to this overarching logic of producing a coordinated outcome. And this to me is very important. This was the purpose why we started the project anyway, outside the program. So I just wanted to, for all of us to keep that in mind. Don't have much else to say. I want to thank Galen for directing this meeting well, and my best wishes, and look forward to our next meeting. All the best to you. Thank you all very much.
Thank you, Stavros. So I too would like to thank the representatives for their participation, all their contributions during the meeting. I think this was a good meeting, and appreciate Shigeo. Shigeo, did you have anything else you wanted to add? All right, then our next meeting will be in September. The CAG meetings will be September 7th through the 9th. I am told that that is likely to still be a virtual meeting, although things seem to be moving quickly, at least here in the U.S., to lighten up on the restrictions. So we will be informed of the status of that at a later date. So with that, we'll close the meeting. Thank you all.